The executive summary. The objective of assignment to assign was to study the financial health of company by conducting a comparative analysis. We decided to choose a Cocoaland Holdings Berhad to analyze and evaluate the statement of financial position and income statement of the company by computing the performance indicators such as liquidity, solvency, efficiency, and profitability for the 3 years. Those financial analysis tools are important to measure the strengths and weaknesses of the company performance. The first one, liquidity, to determine the ability of company short-term asset pay off the short term. The second one is the liabilities efficiency. To measure a company ability to use its asset to generate income. The third one is solvency, to determine whether the company can meet its financial obligation in the long term. The fourth one is profitability, to determine a company operational performance in January. We move to introduction. Cocoaland get its start. They eventually expand their company operations and benefit from a larger profit margins when they are joined by other brothers. MOHD Food Enterprise in Berhad, a producer and distributor established in 1980. After seeing a market potential to produce a polytube beverage in the 1980s, the brothers are able to begin exporting to the Middle East for the first time. Cocoa jelly is created in the late 1980s when they established their own facility. As a result of the company growth, Cocoaland Holdings Berhad is established on August 22, 1990 and officially opened for business on March 2, 1991. Strength. We move to the SWOT analysis. Strength. One of Malaysia's biggest F&B companies using halal certificate produce has its 3 pillars of development. Malaysian snack and candy brands, ROA and ROE are above industry and sector norms, internationally diversified. We move to the weakness. W. COVID-19 disrupted the movement of food and raw commodities throughout the world. Most of the earning comes from biscuit. We move to O. Opportunity. Once the firm has its license, it may grow to Laos, growing vendor mission with a boost client base. We move to the threats. T. Change in economic policy in a southern country will affect the company significantly globally.
Now, I want to explain about year-to-year of statement financial positions of Cocoaland Holdings Berhad. As we can see, the current assets of Cocoaland Holdings Berhad has increased by RM20,993,580 in the year 2020 over 2019. However, in 2021, it decreased by RM5,145,130. Next, the deposits, cash and bank balance of Cocoaland Holdings Berhad have decreased by 9.61% and increased by 4.52% in 2021. This indicates that the company has higher liquidity and less high risk. Then, move to the current liabilities. As shown in the table, the current liabilities decreased by RM14,703,283 in 2020. This indicates that the company faces liquidity problems and pay out more to pay its debt. Contrarily with the year 2021, the current liabilities have increased by RM7,549,170. Moreover, the trade payables of the Cocoaland Holdings Berhad have decreased by 26.14% and increased by 33.23% in the year 2021. This indicates that the company purchased more new items on credit. Lastly, the fixed asset in the year 2020 is increased by 90,848,597. This is because the property, plant and equipment contributed to the increase in fixed asset in that year. Move to the year-to-year of statements profit or loss and other comprehensive income for Cocoaland Holdings Berhad. As it shows in the table, the revenue of Cocoaland Holdings Berhad decreased by 5,946 and 758 in 2021, and it decreased more by RM37,819,000 and 898 during 2020 over 2019, followed by the cost of sales that are decreased for both years, 2021 and 2020, which are 3.95% and 10.17% respectively. However, the gross profit of Cocoaland Holdings Berhad increased by 0.85% in 2021. The increase in other income in the year 2021 is significant since it decreases in the year 2020.
Based on the common size income statement, the gross profit decreased from the year 2019 to 2020 and increased slightly in 2021. In 2019, the cost of sales indicates 71.03%. It gives a gross profit of 28.97% from sales. After deducting operating expenses, Cocoaland Holdings Berhad net income in 2019 was 14.06% of its sales. Next, in the year 2020, 74.97% of the sales cost was recorded for compared to the previous year. Hence, it results in 25.03% in gross profit. After deducting the operating expenses recorded, this company net income in 2020 was at 9.44% of its sales. In 2021, 74.04% of revenue is the cost of sales. It gives the gross profit for that year with a percentage of 25.96%. After deducting the operating expenses, the net income for this company increased in 2021 was 10.4% of its revenue. From the statement of comprehensive income for the financial year ended 31 December for 3 years, even though the revenue decreased from the year 2019 to 2021, the operating expenses is higher, hence give a result in lower net income compared to the previous year. Based on common size financial position, the total non-current asset have upward movement from the year 2019 to 2020 and downward movement from 2020 to 2021 with 34.86%, 44.23% and 41.33%. Meanwhile, for the current assets, the inventories are slightly increased by 3 years with the percentage of 11.94% to 12.49% to 14.14%. Next, the non-current liabilities, both lease liabilities and deferred tax liabilities are decreasing from 2019 to 2021. Other payables also having the same situation, which is the fall and then rise. Cocoaland Holdings Berhad total liabilities and equity in 2019 are mostly made up by their total equity with 84.75%, followed by total liabilities 15.25%. The figure above shows that the percentage of total liabilities for 2019 is higher than in the upcoming years. Overall, we could say that Cocoaland Holdings Berhad might finance by equity more than debt.
Next, I will present about the in-depth trend statement for financial performance for Cocoaland Holdings Berhad for the past 3 years, which is from 2019 to 2021. We set the year 2019 as the best year to do this analysis. As we can see in the comparative balance sheet, here the current asset of Cocoaland Holdings Berhad has decreased by 19.41% from the year 2019 to 2020 and increased by 25.59% from 2020 to 2021. We can conclude the company managed their inventories of Cocoaland Holdings Berhad properly. On the other hand, the current liabilities show decreasing value with the percentage decreasing by 38.04% from the year 2019 to 2020 and increasing highly by 69.56% in year 2021. This thing will lead to the higher financial and show the company is starting to rely on loan and equity. Therefore, Cocoaland Holdings Berhad can reduce their debt by changes to equity financings.
The debt ratio is increasing from the year 2020 to 2021, which from 10.47% to 12.84%. The ideal percentage is from 20% to 50%, but this company's debt ratio is still favorable and considered financially healthy. Next, the debt to equity ratio also increasing from 11.69% in 2020 to 14.73% in 2021. This ratio is favorable because it is less than 100%.
We move to efficiency ratio. Average collections time measure how long a company takes to collect a receivables. The drop indicates that clients are paying faster, which suggests a more efficient credit department. A long average collections time means a company receives a paid too slowly. Goods turnover measure how well a company sells its inventory. Now it shows how often stock is sold and replaced. In 2021 is the worst year for Cocoaland Berhad. In 2021, Cocoaland Berhad collected debts in 71.81 days compared to 67.18 days in 2020. Cocoaland Berhad is less efficient in using its inventory in 2021 given its sales and cost of a goods sold based on inventory turnover.
Now we move to the profitability ratio. Overall, we can see the current performance of Cocoaland Holdings Berhad is good in terms of profitability. The gross profit margin for 2020 is 25.03% and increasing in 2021, that value is 35.96%. It means in 2021, for every 1 ringgit of sale generate 26 of gross profit. Next, for the net profit margin, also indicates increasing from 9.44% to 10.40% from 2020 to 2021. It means in 2021, for every 1 ringgit sale generate 10 cent of net profit. A higher net profit margin means the company is more efficient at converting sales into actual profit.
There are a few strengths of Cocoaland Holdings Berhad. First is talent management, which is the skills of development of human resources contributed into the success of Cocoaland Holdings Berhad in the food processing industry. Second is the success of the new mix product. They provide specific product mix option to its customer to fulfill the customer segments in the food industry. Third is the high profit margin. Cocoaland Holdings Berhad managed to get higher profit margin than other competitors, even their profitability under strain. Lastly, since Cocoaland Holdings Berhad has a strong market leadership position in the food processing industry, it will help the company to rapidly increase the new scale of products.
Next, I will share about the weakness of the Cocoaland Holdings Berhad. First, the low investment into Cocoaland's customer, like the advertisement and the marketing. Next, the high cost of replacing existing specialists in Cocoaland. Furthermore, loyalty among suppliers is low. Then, the weakness of specialized markets and local monopolies. Finally, Cocoaland's market share decline with increasing revenue. That's all from me. Thank you.
In conclusion, the financial position of Cocoaland Holdings Berhad is comfortable and remain healthy with a judicious mix of cash, debt and equity. In this study, we can easily inform about all the company's activities in 3 years. This company has the financial resources to meet its short-term financial obligation. This company also has a low risk and has the ability to service its debt obligation. Overall, financial position of this company appears to be more than satisfactory and remains solid.